here to help us digest what's been going on is Tony Dwyer. He's the Chief Market Strategist at Canaccord Genuity, joining us from New York. Tony, an interesting week to say the least. What's been your take?
Well, it's really been an interesting month. I mean, I expected a correction. I didn't think it would be this extreme, and I think, the reasons that we had been looking for a correction in September, where you had an extreme optimism, you had an extreme overbought condition, and you had extremely low volatility. Those three influences have largely been reversed. So, from the standpoint of, does it do anything to change my stance? Until well after you invert the yield curve and a number of credit indicators go sideways, we're going to be bullish throughout. But there'll be periods where the market goes through a correction, and guys like me are famous for coming on and saying, a correction would be natural, normal, and healthy. But at the end of the day, it doesn't feel that way when you're in it, and I think this is one of those times where we're certainly in it.
All right, well, I mean, I think what we try to do here is have all sorts of opinions, and in a market there are buyers and there are sellers. There are people who are going to see this as a buying opportunity. There are people who won't. At the top of our show, we ran some sound from an interview that David Rosenberg did on this network yesterday, where he, and David is known as someone who is a lot more skeptical on things, generally speaking. But he's saying this is that time to de-risk, and this is the time to get defensive. How does that compare to you, who, generally speaking, still sounds pretty optimistic?
Well, I am optimistic. It's not generally speaking. So I'm a horrible trader. I always, once you have a correction, I tend to get in too early. But when I think of my career, and I've been doing it just a little bit shorter time than David, and when I look at my career, unless you're in a very close proximity to a recession-driven bear market, any correction has been temporary, and even if it's halfway through, it should be used to be bought. So I don't know, John, if we're going to go down another % or two. I'm a little skeptical at today's bounce. Earnings have been ignored, and the only catalyst that, absent the election, some kind of hug between China and the U.S., or some kind of rhetoric decline between President Trump and Fed Chairman Powell, absent those things, and there's no resolution very near term to those, the market's going to do what the market's going to do. However, I think it's really important to look back at times like this. What ultimately drives the market is the direction of earnings. Clearly, I mean, our own estimate is below the street next year. Clearly, earnings were going to slow. I underestimated the impact that would have on some of the more cyclical sectors. But at this point, after so much of a drubbing in those sectors, I don't want to compound an error by not getting defensive enough ahead of it by getting defensive now after you've seen such a decline.
Well, given that, I just want to show a graphic that our producer Rob Graham put together to just highlight what's been happening over the last month. And this doesn't reflect what's happening in the market today. It's based up until today. But to your point, a lot of those industrial stocks, I mean, over the last, I guess this month, down double digits, and technology down more than 10% as well. And you made the comment that you feel like earnings are being ignored. We've got Microsoft, Twitter that the market's chewing on today, along with Tesla, and after the bell, people start to chew on Amazon, Alphabet, Intel. Do you think that is a potential catalyst? If those numbers are decent, does that change the story? Because I'm getting the sense from you that you think that there could still be some momentum against the market.
I mean, truly, John, I have no idea. You're in a fast market where the algorithms and quants are driving it. You could go up 5% as much as you could go down 5%. What I want to do is get the viewers away from trying to figure out the next tick and look at the environment we're in. Again, the guys at Canaccord, no, I don't look for levels. Nobody can pinpoint the exact time or price. But what you can do is you can find indicators that typically surround an intermediate term low. And if you find stocks and companies that you really like, that you loved a month ago, loved them, not that much has changed in a month other than perception. You cannot have, in my opinion, you cannot have when everything looks great, nobody's worried about a thing. If that was the peak, which is true, right? We too had called for a correction. If that was the peak, when everything looks so bad, China and the U.S. are in a Cold War, Europe is slowing down dramatically, the Fed is never going to stop tightening, all these things that are in there are part of the reason you're seeing this crunch in the market. That too shouldn't be considered a sale. Could get weaker, I'm just saying that whatever you lose from here, historically, you should get back unless you're very close to a recession, which there's no indication in our view of.
All right, well, I get it that you don't want to look specifically to catalysts, and we're almost out of time, but you have hit on earnings, you've hit on interest rates, you've hit on the China-U.S. tension. I do want, and you briefly mentioned the midterms. People are going to be talking about that because, let's face it, politicians like to tie it with the stock market as well. What would you be watching with the upcoming midterm elections as an investor in our last 30 seconds?
Well, just holding the Senate for the Republicans would probably be enough to kind of be a neutral election. I think everybody's worried that the Republicans lose both, and you bring back that very bad business sentiment. But clearly, angst ahead of that. And as I said, John, the three catalysts, fundamental catalysts that are going to get you going is you figure out the election. You get China and U.S. back on trade talks, not happening today apparently, according to the news items. And then lastly, the Fed kind of backs off of their consistent, we're going to keep raising, even when you're getting the slowing data.
Okay. Those are helpful things to watch for. Tony will continue to watch it all unfold. As always, thanks a lot.
It's going to be interesting.
All right, Tony Dwyer, Chief
Thank you,
Market
John.
Strategist at Canaccord Genuity, joining us from New York. Speaking of what's happening in